MicroStrategy, now renamed to Strategy, used to be a software company and has now bet its entire future on Bitcoin. We're talking about a multi-billion-dollar bet using debt and stock offerings. It's like financial Jenga on steroids. In this video, I'll break down how MicroStrategy turned $30 billion into an $80 billion valuation, the risky strategy that could make or break the company, why investors are paying a premium for this Bitcoin play, and whether this bold move is genius or just plain crazy. Before we get into it, please subscribe and hit that like button. MicroStrategy has essentially transformed itself from a business intelligence software provider into a leveraged Bitcoin play. But here's where it gets really interesting. MicroStrategy isn't just buying Bitcoin with spare cash. They're taking it to a whole new level. They're using convertible debt and recurring stock offerings to fund their Bitcoin purchases. Let's break down why this is such a big deal. But before we get into it, this episode is brought to you by our 1000% Profit Reports, Beginner's Edition. Back to the analysis. MicroStrategy's financial stability now hinges on Bitcoin's volatile value. And here's the big deal. MicroStrategy's stock price has been trading at a premium compared to its Bitcoin holdings. At one point, their market cap was about $87 billion, but their Bitcoin holdings were only worth about $25 billion. That's a $60 billion gap. Right now, if you buy a MicroStrategy share, you're paying way more than just the value of the Bitcoin it holds. It's like paying $10 for a piggy bank that only has $3 worth of coins inside. You're paying extra for MicroStrategy to hold Bitcoin for you when you could just buy Bitcoin yourself for less. But here's where it gets tricky. MicroStrategy has been issuing more stock to buy even more Bitcoin. It's a clever move in some ways. They're taking advantage of their high stock price to acquire more of the asset they believe in. But it's also diluting existing shareholders. It's like they're constantly expanding the pizza, but each slice gets a little smaller. And by borrowing money, MicroStrategy makes investing in Bitcoin even riskier than just buying Bitcoin directly. Now, let's talk about the man behind this bold strategy, Michael Saylor. This guy is a true Bitcoin believer. He's not just leading the company, he's become a major influencer in the crypto space. But here's the million-dollar question. Is this a sustainable strategy? Well, here's something to consider. If you're bullish on Bitcoin, why not just buy Bitcoin directly? There are now ETFs like the iShares Bitcoin Trust that offer straightforward exposure without the added company risk of MicroStrategy's $60 billion premium. With MicroStrategy, you're paying extra for an expensive middleman to hold Bitcoin for you, when you could just buy Bitcoin yourself for less. On the other hand, if you're looking for a company with more traditional business value, MicroStrategy's pivot to a Bitcoin-focused model might not be what you're after. Their original software business is now just a tiny fraction of their value proposition. So what's the bottom line? MicroStrategy is essentially a leveraged bet on Bitcoin's future. It's exciting, it's bold, and it's definitely not for everyone. If you're considering investing, you need to be comfortable with high volatility and have a strong conviction in Bitcoin's long-term potential. Always do your own research, understand your risk tolerance, and never invest more than you can afford to lose. That's all for today, folks. Drop your thoughts in the comments below. I'd love to hear what you think about MicroStrategy's Bitcoin strategy. Until next time, happy investing!